Welcome, everyone, and thank you for joining our webinar today. This is Pat Sherlock, and for those that are new to our webinar series, I'm going to be sharing our company's research and best practices from our clients in mortgage banking. My firm is involved with helping improve sales performance in sales teams. We use this through our assessments and also through our development training programs. Our approach is science-based, so the information that I'm sharing today is data-driven. Today's topics are really important, obviously, because understanding real estate agent needs is critical as we go into 2015. I know you're busy, so I'm sharing what really matters on this issue for improving your origination results. Let's address the real critical question that I think sometimes what I see, especially in a consulting situation, a lot of loan officers ask this question: why are real estate agents still around? And certainly this is a very important question when you look at that certainly real estate agents kind of fit in the same profile as middlemen, like travel agents or insurance agents, even bookstores. But of course, those folks have faded. So it's reasonable to think the real estate agents would be the next in line. This is not the case, and certainly I'll share information to show you that the stats actually support the real estate agents are not going away anytime soon. The 4 reasons listed on the slide tell a little bit about the story. Since 2008, and I really don't have to remind any of you out there that the post-crash world in housing finance is obviously a lot more complex. But buying a home is still a big decision that any individual will make. What's interesting to see is that the Internet actually has improved the productivity of the real estate agent. And likewise, the Internet and technology has actually increased the agent's leverage with their broker. As many of you know, the demographics of the real estate industry really is somewhat similar to the mortgage industry, but let's look at it in a big picture. This is information from the National Association of Realtors 2014 report. In the country, a total of roughly almost 400,000 real estate agents. I think it's probably not surprising that 57% of them are women and 43% are men. What is interesting is that over 94% come from other industries. So these are actually people that have worked in other additional industries before they come into the real estate industry. And likewise, from a college education standpoint, 61% of them have some degree of college. So again, they're experienced business people with a college education or partly in their background. When you look at more facts about the real estate agent, the median age is rather similar to the mortgage industry, where it's 56 years old. The typical agent has experience of somewhere around 12 years. Interestingly enough, even though they are experienced business people and actually obviously senior business people, these individuals, 91% of them are active users of social media, and we'll talk about why this is very important from an origination standpoint. When you look at the breakdown between agents and brokers, 60% of the sales agents are representative in the profile, 25% are brokers, and 17% are broker associates, and the remaining part are appraisals. I don't think any of that is that surprising. When you look at the race end of it and the marital side of it, 87% are white, the remaining are minorities, and likewise 72% of the real estate agents are married. I think it's most interesting when you look at the income profile. As this slide shows, roughly 10% of the individuals that are real estate agents will make over 6 figures. The remaining 90% are in a variety of different income brackets, with 20% of those individuals being in the $10,000 to $24,000 range. So it's very true in the real estate agent world, likewise in the mortgage origination world, that the 80-20 rule definitely applies. When you average the salary of the average real estate agent, the income of the real estate agent, you're talking about roughly around $40,000 a year. And when you look at that from a numbers standpoint, that translates into the average real estate agent is doing one transaction a month. So again, in the big picture, understanding the income numbers really tells you a lot about how originators have to approach real estate agents. It's frankly a very tough business, similar to mortgage origination, and they do have to work very hard to get a customer. It's interesting when you look at some of the boards that are on, discussion boards that are on Zillows and so forth, there's always a lot of conversation going on between real estate agents and loan officers on who works less and who is actually not much of a contributor to the transaction. But the truth of the matter is that both sides obviously have a very difficult challenge. When you look at the home buyer stats, and this is again for 2014, it's very interesting that the first-time home buyer is actually 31 years old. The median income was $64,000. And the most important point that really does segue into the issue that was discussed just a few seconds ago, 88% of the buyers used a real estate agent in a transaction when purchasing a home. When you look at that from what was the percentages in 2001, it really has leaped. So what we are really seeing is not real estate agents declining in importance as far as the transaction is concerned, but obviously have become a lot more, basically a lot more important to a transaction and happening. So from 69 to 88%, it's a big leap, and certainly what I would say is that I don't see this really changing in the future. It's also interesting to note that roughly almost 40% of the sellers basically found their agent through friends and family. That's really a large percentage, and when you look at the amount of agents that are involved with social media, you are seeing that that's a real critical part of their business of getting leads. And then on the other side of it, if they do a good job, it's interesting to note that 25% of the transactions, the individuals use the same agent that they used before. So pretty important to understand that as far as referral services are concerned, is the real estate agent has become more important today and not less important. So when you look at the challenges that originators have, and obviously you live it every day, and I certainly see it in consulting, and actually even this week I was at on a consulting project, and this whole issue of how do you source real estate agents is really much different than what it was in the past. The challenges primarily kind of fit in for the originator into three kind of pockets. The first is, unlike in the past where they would come to the office and then congregate and then you could go there, many of the real estate agents actually work at home. The second part is a lot of these brokers have formed marketing servicing agreements. No question that that's a trend that really is pretty significant from the standpoint that the real estate agents will have a preferred lender. And I think the most important issue that's not really talked about but should be talked about, this is very similar to what you see on the wholesale side of our business and actually in the correspondent side too. What you're seeing is that in the past, as an originator, you could be your 8th lender or the 6th lender, whatever number. You didn't have to be the 1st or 2nd lender, and you could still make money. But today, that's not the case. You have to be in the first 2, or you really are not going to have any business, or would it be profitable? So that dynamic isn't discussed a lot in origination, but really does apply to all of the business lines in mortgage origination, whether it's retail, wholesale, or correspondent. You have to be the top preference, or at least 1 or 2, or it's going to be difficult for you to survive as an originator. So let's look at 5 practices that are action steps that, as an originator, we see really does work and does make a difference from a production standpoint. The first issue that I would say that the relationship has to be greater than just the current transaction. Certainly, the current transaction is critical in how you perform with it, and we'll certainly talk about a lot with that with Pat today. But we'll talk about also this issue of developing a relationship and being involved with the real estate agent and their business model. What we see with top producers, that these individuals do become their friends, and that's because they do basically become involved with what the real estate agent is involved with. The second practice that I would suggest that you really think about and implement is really setting specific goals on activities. Again, what I'm describing as an activity is providing valuable information to increase the real estate agent's business. I think too many loan officers concentrate just really on products and features and think that's enough. What you see with top producers is the top producers are actively thinking of ways of how to increase the real estate agent's business and then therefore solidify their own relationship with them. So setting goals on activity of how you provide that valuable information is really an important step for you becoming successful in the new market. The third part is you always have to be prospecting for new agents. Many times what I see with loan officers when I'm consulting or coaching is that they have a very limited number of real estate agents, and frankly what we were discussing before on their profile, that's really not a good strategy. You really actively have to be looking to source and prospect for new agents. The reality of it is that people retire, people get out of the business, but when you look at what top producers are doing, they're always looking for that next referral source. So always be prospecting, I think, is actually even more important than always be closing. So if you can remember it that way, it's always be prospecting and looking for new agents. Fourthly, you have to review on a regular basis who is the current match for your sales model. Many times when you're looking at, you might have been successful, especially in the past, you're still continuing with a sales model or a business model that doesn't really work today. I call this kind of the boom and bust cycle. You could be successful, certainly in the past, and obviously those originators that are in the business today had prior success at some point. But your model needs to change, and certainly change with the times. I find it very interesting that the real estate agents, in a lot of ways, have made leaps from a technology standpoint. You don't necessarily see that on the mortgage origination side. So looking at your business model and who matches up is a constant effort, and I would suggest in the past it was maybe looking at it once a year, but today you really have to look at it, I'd say, every quarter, because you always have to be marketing to find new referral sources. And finally, the tried and true does really work, and that applies to having a solid relationship with real estate agents. You always have to underpromise and overdeliver. I think so many originators, either they don't know the products that well, they're mystified when there's an issue about some criteria in the loan, and that leads to unhappiness on the real estate agent because they weren't forewarned. I would always tell you that knowledge of the underwriting guidelines is just the critical part of your business, and that leads to your ability to, set the expectations for how the loan is going to go through the process and how the real estate agent is going to be notified of different points in the loan process. I would really recommend a book that I consider really a great marketing book. It's by Andrew Dietz, and it's called The Opening Playbook. For those that are interested, that book I think is really reflective of the state of the art of what is basically occurring when you're trying to develop from scratch new relationships. So you might want to check that out. So today's takeaway is pretty simple. To be successful in 2015 as a mortgage originator, you really have to make a priority to have as referral sources the real estate agents. And the steps that we've just talked about are ways for you to increase the number of agents that you deal with. Just a couple last things that I'd like to leave for everybody. We do have other resources that you can tap into. In particular, you can sign up for our weekly sales blog, and certainly we do record these podcasts. They are on the website, and certainly I'd also like to link up with you, so certainly go to LinkedIn, and I certainly would want to hear from you.